Hello, it's Pentacore. Today, we will look closer at why Canada is a paradise of real estate investment. Investing in Canadian real estate offers many advantages that make it an attractive destination for investors worldwide. I'll share interesting facts about Canada in two parts. First, general information about the country, then a deep dive into its real estate factors. Canada is the second largest country in the world. It also earned the distinction of being the second best country in 2024. It has also received recognition as the second best country for both starting a career and establishing corporate headquarters. Family-oriented environment and lifestyle contributed to its ranking as the seventh best country for raising children and the sixth best country for retirement. Ranked fourth globally for its abundant freshwater resources, with lakes encompassing 8% of its territory, also claims the longest coastline worldwide. Additionally, Canada maintains a manageable stance concerning the risks associated with global warming. Canada holds the title of being the largest producer and exporter of wood. Furthermore, it ranks third in wheat and flour exports worldwide and fifth in terms of energy production. So you already have the answer to why invest in Canadian real estate. Over the past 15 years, the Canadian real estate market has consistently outperformed its G7 counterparts, demonstrating superior overall performance metrics. There are four leading indicators for a country's real estate performance. First is government and banking culture. A robust and meticulous banking culture is essential for fostering future real estate returns, as it cultivates effective risk management, stability, transparency, and responsible lending practices. Second, productivity and technological progress. A highly educated, productive, and technology-driven economic foundation has the potential to generate greater value within the economy, leading to increased wealth for its citizens. The correlation between higher wealth per capita and future real estate value is significant. Third is the population growth. Population growth is beneficial for future real estate returns as it drives up demand for both housing and commercial properties. And lastly, indebtedness. Countries burdened with high levels of debt across major sectors face limited capacity to acquire new credit. This constriction in future spending and investment negatively impacts real estate values. Canada leads the rankings with an impressive composite score of 5.6 at the top, hence distinguishing it from other G7 countries. However, Canada has the fewest housing units per population of any G7 country. Canada's per capita housing supply has dropped in the past 5 years. The average number of housing units per 1,000 residents is 471 across G7 countries. Canada's average is only 424. Moreover, the Canadian government is set to grant a substantial number of permanent residency and is pushing more demand for additional housing. Also, Canada's stable political environment and respect for the rule of law contribute to its appeal as an investment destination. The country has a long history of political stability and strong institutions, providing investors with confidence in the integrity and reliability of the regulatory framework. In conclusion, Canada is positioned for strong performance in the real estate sector, benefiting from a well-rounded blend of fundamental elements that have garnered it the top composite score. And that wraps up our insights on why you should invest in Canadian real estate. Follow us and stay tuned for our next video.